Hey YouTube, welcome to today's video. I'm going to talk about C3.Ai under a ticker symbol AI. So let's find out if it's a solid opportunity or not. Should we invest in this stock or just ignore it? So let's discuss about the opportunities and threats to this stock. Before we go further, just hit the like and subscribe button so you'll get the daily updates. And first of all, what is C3.Ai? It's an enterprise AI solution. AI is powering the tech industry for a few years, and most of the industries are investing in AI to enhance the sales and profit margin. So basically they're providing a software as a service model which helps predicting the future events and allows to plan strategy accordingly. To understand the C3.Ai product, let's take a use case. So Amazon normally knows your needs even before you buy. That's how they can predict the demands and can fulfill any possible demand and supply shortage in the future. But not every company has the budget or the best team to develop their own AI software and make them intelligent enough to predict more efficiently. So ideally, it's a good way to hire a third-party company or provide them with the data to efficiently predict using their state-of-the-art AI solutions. C3.Ai is providing the AI platform which allows a firm to deploy the AI solution without developing from the scratch. So the artificial intelligence is going to change the world more than anything in the history of mankind, even more than the electricity. From transport to manufacturing, healthcare, education, media, customer services, everything you name it, and AI is going to change that industry. AI is potentially going to change the way people do jobs right now. And once quantum computers are in the market, AI is the next tech boom. So this opens a clear opportunity for AI to grab more market shares. Secondly, the product is diversified within its core business. They have a total 4 major software solutions which include an AI software suite which allows to build AI applications using C3.Ai libraries, which means clients can customize AI apps but definitely would require development. Secondly, they offer pre-built AI applications that can target various use cases. And thirdly, an AI-based CRM with the partnership of Microsoft and Adobe is an amazing idea, and that's how they are targeting the huge CRM market. The fourth one is quite interesting. Unlike the software suite, this product requires no code, so technically this can help small businesses and allow everyone to deploy the AI without knowing the code. And this will make it easier for small firms to adapt more quickly without hiring a technical team. So from a product perspective, C3.Ai is being diversified and specific to its main idea of developing AI solutions, which I personally like because that's how they can put all of its focus on AI and can explore various possibilities in that particular domain. And C3.Ai has built strong corporate as well as government relations and secured various contracts from big companies like 3M, Shell, Baker Hughes, US Department of Defense, and more. So technically C3.Ai is providing services to large-scale customers including the government sector, and right now making 1.1 billion predictions per day. Although Palantir and C3.Ai has the same characteristics for providing problem solving, but C3.Ai has more enterprise customers. But top 3 customers are generating more than 44% of its revenue, which is a negative thing for a company to rely this much on just 3 companies. But the good thing is C3.Ai's new X Manica, which can target smaller companies, will definitely help diversify the revenue dependencies. The total addressable market is going to be almost $300 billion by 2024, which means there's a lot of potential runway here. So the company has the opportunity to grow the revenue massively, and annual growth rate is high, and I'm expecting C3.Ai will capture more market because it's better than other companies due to having more data than anyone else in the market, and AI is totally based on the information provided to the model. So basically C3.Ai has 622 million data sensors generating data for its suite, as well as more than 770 data integration sources are making them more robust in terms of data, which is showing company will use this data to improve the AI system, and ultimately it will get more customer satisfaction. According to the Statista report, more than 65% companies using artificial intelligence have improved their revenue by at least 5%, and even some companies have increased this value by more than 10% and also has reduced the cost drastically. By 2030, worldwide IT spending would increase to $5 trillion with the growth rate of almost 5%, and artificial intelligence spending are almost 5% of this IT spending, which is going to grow in a fast pace in next few years, and it's expected to have a 45% growth rate in 2024 for all AI software platforms. But on the other hand, we must need to analyze the threats to this company as well. Most of the revenue is coming from just a few clients, means the company is highly dependent on a major few customers, and if they fail to renew the contracts, they can face major decline in the revenue growth. Although the AI platform is solid, but the competitors are not small companies and they need to compete with them to capture more market as well. Right now, they have not occupied even 1% of the total AI market, which implies that the company's growth is highly dependent on how they market market their AI solutions. So now I'm going to talk about the financials. Company's revenue is increasing year over year, but on the other hand, the earnings are getting more negative since the last year. That's why the earnings per share is negative 1.43 and price to earning ratio is negative 48.3%, which cannot be negative basically because they are not generating any earnings, so that's why it's negative right now. So this tells the company is a little overvalued. However, the good news is the company has $960 million of cash, and I was not able to find out any debt information in their annual report. Although according to Yahoo Finance, they owe only 3.8 million in debt, which makes its cash to debt ratio quite good. Additionally, the company's current ratio is 11.2, which shows it has 11 times more assets than liabilities, which is awesome in my opinion. And absolute liquidity ratio is 10.79, which makes the company quite solid in terms of solvency because they have raised plenty of cash. Finally, let's discuss about the management briefly. Tom Siebel is the founder, chairman, and CEO of the C3.Ai. Previously, he founded Siebel Systems in 1993, which merged with the Oracle Corporation in January 2006. He is a billionaire businessman, technologist, and author as well. Tom has a solid background and has received plethora of awards for his business and technology services. A very important mention here is their board of advisory. The company has got big names and influential people as its board of advisory, which is splendid in my opinion. So personally, I'm going to buy this stock for a long-term position at the current price, even though it's a bit expensive right now, but we have already seen the very bottom line of the share price. So I personally think that the stock will grow faster and can 5x in the next 3 years because the future of AI is clear due to the growing demand of computer automation and quantum computing. This industry is not going anywhere. That's all for the video, and I hope you got new information. If so, don't forget to subscribe and share this video and hit the like button. I'll see you in the next video.